Started in the mid-'80s, so I'm not a youngster anymore. I had a professional career in the industry and came up through several brokerage firms many, many years ago and got to the rank of vice president of A.G. Edwards. I've trained with people on the floor of the S&P pit, and my mentor, it's important to have a mentor, was a floor trader from the cotton market, if you can believe it. So along the way, I've ported a lot of floor trader techniques to the screen. I only trade the first hour and a half of each day now. That's not a recommendation to you, but and a lot of my students continue to use my methods throughout the day. But trading the first frame of the day is a great gig if you can make it work for yourself. There's tremendous volatility in the first hour and a half of the day in the stock index futures markets, as any of you who've even observed them know, and it often seems irrational, at least to the beginner. It was to me when I first tried to tackle it. Until I discovered this concept I called serial sequent wave method, I was never able to consistently turn the risk of the first hour volatility into tradable opportunities. I presume you're here because you're now trying to figure out how to make a business or career out of trading in the markets for yourself, like some of us have managed to do. And I'm here to help. I'm going to offer that to you in a number of ways. I am author of this book, but no, it's not available to the public currently because it's got so much of my intellectual property in it, just the membership of the Valhalla Futures group and those people who come on as students. However, I have carved one of the most important pieces out of that book and put it into an ebook. And if you stick around, I'll tell you how you can get that for free. I use my own stuff. I've been a diligent student myself of other brand name concepts. I know that if you've been out there at all, you're familiar with all that stuff. Elliott Wave, I was an ardent student. Fibonacci, market profile, among all kinds of other stuff. But I do have to report to you that I was unable to make consistent profits with these from the right edge of my video screen until I discovered some other concepts of my own. But, you know, that's my sales pitch. The real success and consistency, in my opinion, actually lies outside methodology. I'll repeat that. I believe consistency actually lies outside methodology. It was something you need to put into practice as a trader, and we'll get into more on that a little later. I have a track record. You can make judgments about a methodology with a track record. You can check my log, my performance archive, and if you stick around today, I'll tell you how to monitor my trades in real time. Just trading the first hour and a half of the day, I consistently make between 3 and 5 mini Russell points. That's about 10 ES points, if you're more familiar with that. I do call trades in the YM, the NQ, and the ES, but I think the Russell is like the best contract I have ever traded it. I have traded everything over the years, including CDs in China. I mean, the really obscure stuff. I've never seen anything like the Russell. I've never seen anything that trends so well, that has great volatility, and the signals are so consistent. So if you haven't tried the Russell yet, I want you to consider it, but you can watch me trade it if you like. I do not use intuition to take these trades. There's no stream of consciousness in which I try to figure out where the market's going. You'd be taking exactly the same trades as I do, just as my students do, without me, if you knew what I was doing. If you're really adept and you're good at your trading platform and have preset trade strategies in place as OCO orders, I presume some of you do, you could take my trades without knowing what I'm doing, because I call them ahead of their arrival in real time in a trading room. Now, I'm stressing that because I'm going to compare myself today with some other techniques of making trade rooms so that you maybe have a chance to see the two. I do have to admit that a lot of newcomers tell me when I coach them or talk to them later that they can't take trades where I call them. And that's actually kind of comforting to me. But when it gets down to it, they just say it's just too emotionally uncomfortable for them. I'm going to more about that and how to get away from the 90% crowd who tend to lose a bit later. My goal is about equivalent of 6 to 10 ES points every day, but obviously a number of my students trade all day long. It's not a limitation to that. There are student testimonials on my course, on my website about my course, and also the website of a brokerage firm, interactivebrokers.com. You can see their logo on the bottom left of your screen, where I'm rated as one of their top educators. I'm also an education partner of ninjatrader.com. I've been using TradeStation. I had been using TradeStation for forever, 15 years or something like that. But I've never been happier than I am with ninjatrader.com. Their new version, I switched with them, and you can use their charting software for free. And you can use their trade platform in simulation for free. And if you go to my website and click on free simulation, you can download their software. And if you've never used it, or you have any doubts about what you're doing now, or you're unfamiliar with placing strategies so that your stop is placed automatically, your target's placed automatically, and so forth, I suggest you think closely about it, because I don't think you can succeed with futures without trading with preset management strategies. I have a futures trading course, and the software comes with it. You can read more about that on my website. But the testimonials that if you bother to read them from my students on either of those websites at the bottom of your screen, can tell you what they think of it. I'm going to give you some deliverables today. I'm going to throw some stuff at you, so stick around. This first one I added after, it was actually a couple weeks ago. I've done this seminar twice in the last week or so. Because trying to figure out what I was going to do, I sampled some other webinars, and frankly, I was kind of shocked about what's out there. So I'm going to give you some criteria from the inside on how to judge vendors, really. It's a dirty word, but vendors like myself from the inside. I'm going to give you a sample approach to what's inside my trading room. So it's going to be like a day in the life or a morning in the life. I'm just going to go through it every trade, and I'll have it side by side with somebody else's trade room just to show you a different approach. I want to give you the key to what I think consistency is in trading. I hope I'll be able to give that to you in example, but there's another way I can give it to you, and that's I've written an ebook on it. And if you stick around, I'll tell you how you can get that from me for free. I'm also going to offer you some coaching as a deliverable. Don't worry, this is not a hook. I don't sell coaching, but I don't trade in the afternoons. I enjoy talking to traders. I enjoy talking to new traders. I was mentored once myself. I know how critical it is to have somebody to talk to. And we can use Skype to do this. I've also got unlimited dialing on our long-distance service, but I'll make it real easy for you. Stick around, I'll tell you how they can do that. I want to give you an overview on my methods. Not all of them, don't have time for it, but there's two main pieces, and I'm just going to give you a snapshot of what that is and some example trades. And those trades will be done against the trade calls that I made in my room, which are time-stamped someplace out there in cyberspace on some server, I don't know where, but it becomes part of my track record. Once I buy, I post a quote, and I'm there, and I'm tracking that trade. And it's a record someplace out there that I certainly can't change. I'm also going to give you a trade model I look for as a take-home every day. It doesn't occur every day. Most of the serial sequence stuff occurs. You get 5 to 10 signals in the first hour and a half to 2 hours every day. But this particular one I'm going to give to you, it's fairly easy to understand, and it comes from my support and resistance grid. And at the end, I'm going to show you how you can actually monitor my trades. Look, I believe I can teach you to do exactly what I do every day. My course is one lesson per week. It lasts 10 weeks. You can repeat the course as often as you wish. The software that plots the method on your charts and builds the support resistance grid is included with the price of the course. Some of my students seem to do much better than I do. Pricing for the course and more of the course syllabus you can read about on the website, valhallafutures.com. So let's get into some of the deliverables. Vendors. Who are these guys? I was actually shocked. I had no idea what you guys face when you out there trying to judge, if there's a piece of information you think is going to help your trading, and then people are asking big money for it in some cases. My price isn't all that cheap, but I do put a lot of time in it. But some of these guys are like snake oil salesmen. They have shills in the room who are also getting paid, and they sort of gang up on you when you got a telephone number from you and so forth. It's unbelievable. Some, however, did seem fairly straightforward, generally enthusiastic about their work, but it just didn't seem like they had much to offer you. It didn't look like it was very promising, and so, of course, they just tried to dress it up. But a couple in particular just seemed plain deceptive. And by some of these vendors, I think you're being taken advantage of. So I caution you on your educational endeavors. I've heard some real horror stories about this in private chats, but I'm not sure any of the ones I get were anywhere near that bad. But I do caution you about your educational endeavors. I'm going to give you some criteria to have a critical eye about making a judgment about these guys. Generally in two categories. One, they have some demonstrable technical tools. That's versus the other guys who say they trade from naked charts. There's nothing on their charts whatsoever. Whether in the form of some knowledge, these guys with technical tools, or some proprietary method they developed and perhaps codified into software, or some combination of both. But look, if they not only have a track record, or claim to have one, but can demonstrate that track record in real time as it's being made with trade calls they actually specify and track, then maybe they just might have something to offer you. But remember, they have to be real calls that they track, not some general decision support that the guy didn't commit to, like coming up to a number, there's support down here, and it bounces, so he says, okay, you can take some profits. What is that? Did he get in? Did you get in? He should report a fill that he's going to track. And that means his track record is subject to the consequences of having to manage the trade, just like you do. Making a decision whether or not, he got over his emotions at that point. With a reasonable stop, a series of exit strategies, or whatever, But no mushy decision support. Otherwise, if he can't trade with what he's promoting that you pay for, what are you going to learn? Just ask yourself that. That's what I ask myself when I hear about these guys. The second general category is the type that I'm really leery of. I found 3 of them. I guess it's like a trend. I don't know. But these guys you should be really aware of. They come on really strong. They're easy to identify. They have this blustering self-confidence and arrogance and a rather intimidating tone when you challenge them. So they're easy to recognize. They build themselves up by tearing everybody else around them. One of them won't even tell you his real name. What is that? So, look, I agree that there's a lot of technical analysis is junk science, believe me. Or it's just a soft decision support that will lead you to a sort of a flowing intuition about you trying to figure out where the market's going to go. And that isn't helpful. Well, it can actually be a hindrance to you. But these other guys, they're all about their ego. They predict the market. It's mostly numbers. They can tell you the exact high and the low the day before it arrives. The only problem is, having watched a couple of them in their free trials, because I took their free trials in their chat rooms. Why not? I'm not afraid of them, so they shouldn't be afraid of me. When it came time, they couldn't seem to give you the route the market was going to take to get to any of their supposed numbers. The numbers are all going to be hit eventually, so anybody can say, I told you so. But when it comes to dealing with the often labyrinthian course the market takes from getting to any eventual outcomes they told you that was going to be happening, they couldn't handle it. And most of the time they disguise this by simply not committing themselves to what you as a trader are going to have to commit to in order to take an actual position. And when when you challenge them, they kind of bark back at you. They make you feel small. Refer to your relative inferiority in market wizardry because they're the professional. And they allude to some number they gave you earlier in the day. I told you it was going there. We call the market tick by tick, I heard one guy say. Or they remind you that this is a professional room, implying that you're not professional. You're the little guy. I'm the professional. But if you listen to me, I'll make you the professional. And one time I saw this guy say, just getting sarcastic, what, do I even have to click the trade in for you? That one, I actually laughed at that one. Look, what I'm trying to say is this. You don't deserve to be talked to that way. Come on. Don't be a lemming. You're the customer. You deserve respect. There are no stupid questions. And no challenge you make to a vendor's service deserves an evasive answer in an intimidating tone. When you challenge them for not committing to clear trade calls, I mean, are they in or not? It's maybe in a zone, that's okay, or a particular price, whatever. They come back at you by telling you this is a professional room, and professionals don't do that? What, are you kidding me? That's unprofessional double talk. So while I was sampling one of these vendors out there hawking their wares, I thought I'd follow one of their types that tend to promote themselves without a track record and without following specific entries, so you could see a contrast. And it might be valuable for you to understand, because I don't know who you all are. Some of you are, just at the very beginning stage, and some of you are sharp enough to know this already. But maybe this will be a value of you. On June 21st, so I have another slide here, but the criteria for judgment should be, avoid of intimidation. Your questions are important, and don't disguise the fact that you didn't really get into the trade. I mean, are you in or are you not? That's a fair question to ask the guy. Well, I gave you that number. No, I mean, I don't know. It's just a number. If it breaks that, it goes below to the next number. Yeah. What? Duh. You should have a specific, demonstrable trade entries and a track record. Are you in or you're not? Because your methodology needs to be proved, or it's in question. All right, bottom line, it's in question. Back on June 21st, just a couple of weeks ago, there were a bunch of highly watched economic reports. I'm using this example on that particular day because that's also a great example to tie in with the news, because new people don't seem to know what to do around the news. It can be kind of scary. That 10 a.m. news comes out, and some of those economic reports are really kind of scary. This is a chat room you see up here with two contracts. The TF is on one side. That's my drug of choice. I love the TF. And this guy only trades the ES. That's not my text or my chat room on the left side. Mine doesn't look like that. Mine looks like this. And I don't bloviate about the market. I just try to look for the next setup. And so the selling will be in red, and buying will be in green. And if I don't get filled or the market runs away from me or whatever, I cancel in yellow. And there's some slight variations of that. But I do want to read what this guy was saying against the current prices that were going, and then we'll just sort of compare the two, and I'll show you my trades as we work through right up to 10 a.m., because that's an important piece of information on how to handle trading around the news. I'm just going to read what it says. No, that's my script, but I'm flipping back here on the screen, but I'll leave it on this one. I'll just read you what this guy's was saying. This is June 21st at 9:32, so it's right after the market is open. And it's kind of writing in a shorthand here. Market still strong, though, so AGR, I guess it stands for aggressive, can use TEH, that must be the. So aggressive can use the 1350 area as the most aggressive rebuy. That's up here, and he was making those comments up here before at 9:32, right early in the morning. Or with the 1349.25, that's another number of numbers. That'd be best if holds, he's called it. But of course, eventually did get down to that number. Or just be aware that the potential pullback to 1347 area is not off the table yet. So short leash. I'm not sure what that is, because he specifies you need 5 points with any of his recommendations. I don't know if it means he bought some here and bought some more there or whatever. Well, I say strong, he goes on to say. Slightly better than mixed, but not mush. But certainly not weak enough for any plunging. Well, what this reeks of to me is trend prejudice. And I'm doing this for a reason, because I'd like to teach you not to have it. Then he goes on to say north of 1352 is still bonus dollars for now. That means some kind of a goal of 1352 if you buy it aggressively at 1350 or 1349, or the possible pullback to 1347. Somehow you're supposed to have a short leash. I don't know what any of that says. But in any case, and then he goes on to say what 10 o'clock is, which is the existing home sales, Philadelphia Fed, leading economic indicator, and the FHFA Housing Price Index. Now, any one of those can really make the market move. And if you if you're a beginner and you don't understand how to position around that news, it's best just to get out and not trade around it. But there are some ways to trade with and around the news. I'm going to show you how I did it. And this is the same approach I use anytime the news comes out. So 10 a.m. is a big whammy coming. You got 4 big numbers coming. So keep that in mind, and let's just go through this. I'll tell you about mine when I've got it on the screen here. Selling TF, next push up, if coming to open short. That's the language I use. Next push higher would be, I'm just trying to abbreviate it, next push up, if coming. And that was at 9:38, but it didn't come. This is the YM contract because it's the next one I'm trading. But the TF looked just like this. And this trade call basically was if the TF went to another leg up, I was going to sell it. It didn't happen, so I canceled all my TF orders. Real simple. Several econ numbers at the hour. Those are my market comments. Several econ numbers at the hour. I do not want to prejudice the trend. And I'm going to pound that in as much as I can. I hope you read the ebook and it'll be more explicit, but I'm going to use that as an example a lot. My next trade call, should the YM go lower, is to buy it. Buying YM next push down. I don't have a signal right now in the TF or anything else. If coming to open long. I don't know what this person's done. If he bought some aggressively here and he's added on, he has no commitment to trades whatsoever. He just said those were a couple of numbers. Well, I've got a number down here too, breaking this low. I'm interested in being a YM buyer if that happens. The slides seem to change slowly, so I'll have to pause between them until they appear. There we go. So I'm in 2 contracts here so far, and just a quick overview. How did I get in them? I buy 2 different ways when the market is falling like this. I'm in a buy zone. Don't worry about why I'm in there. That's serial Sequent, and it said to buy the next push down. It gives me that in the software. It's on the right edge of my video screen. I'm not judging anything about the market except that it's a trade model that I want to buy in. Okay, I use 2 methods. I use a limit order like everybody else does, but when it's falling like this, I put a trailing buy stop. As it breaks the previous low, I just move the buy stop down because I look for reversals like this. I'm in a reversal zone, so it's probably going to price reject. And you can see these same kind of spikes everywhere, so it's a pretty easy technique to get used to. You just have to know how to handle it, that you're going to buy on a buy stop as the market is falling with a price just above it. And if it reverses back up, you get filled. I bought 2 at this price, if I can, 12,760, a little abbreviation there. Second at 12,757. And the first one I don't like too much. It pops up and I jump out of it. +4. I know that's not much, but I'm trying to pay for the trade. I usually get +5. I probably used an MIT order, which means it hit this thing and then jumped back once. Market if touched or chase if touched on NinjaTrader. Don't worry about that if you don't know what it means. It wasn't a great fill. I didn't like it, but it gives me -5 on the second one, which means that I'm basically net break even. I'm in one here, and if it falls below this low, I'm going to get stopped out. But I just paid for the trade. And what I'll often do is if this is a zone, it doesn't usually go straight back up, but if it is a zone, it might look like this, and I'll have a chance to buy a couple different times. And that's a habit I try to get into. This person called this number at 1347.50, and maybe he's trying to buy down here again, but he's already in here, maybe, or he's already there, maybe, I don't know. With a target up there, I don't know. There was no commitment to trades whatsoever. He's just saying, I told you it would get there, so to speak. Really don't know. But you can see I'm trying to be very specific about what I'm doing. So I'm in the YM. Let's see what happens next. The YM pops up, but I also get in a second contract, buy it back in at whatever that is, 12,759, and I get out of that one +5. So I've already taken about 10 points out of the YM, and I still have one. That's what happened on this little zigzag, and that's a really typical technique. You don't know exactly where the low is going to be sometimes. You might think you do, but you don't. And if you partial out, and when it's working in a trading range like this and work the order a bit, it's easy to work your way out of risk. And it just becomes habit to you. You cannot do this unless you have preset orders. Every time I place an order, the stop is placed automatically, the target is placed automatically, and with NinjaTrader it leaves a line where the stop is and a line where the target is, and you just take your mouse and move it. It's real simple. But it's already there for you. You do not have time to be messing with any other menus. I presume by now for those people who have joined us that this is not unusual for you. But if you are that new, you need to consider setting up OCO orders and preset management strategies. Okay, I dumped the YM. Why am I doing that? Not good. I say something not good. It's a solo launch. Everybody says the ES and the YM lead the market. That is so false. Occasionally they might, but it tends not to be true. And if the YM takes off and everything else is just staring at you, you're usually about to get whacked. The YM tends to be a very poor leader. So I just dump it and take a profit. I'm just trading, right? I'm not trying to be right about anything. I'm canceling my ES orders. Oh, up here. While I was taking the YM order and I was getting filled, I'd made two other trade calls. I'd be buying the NQ and buying the ES on the next push down. They were here already. So I had signals on those as well, even though I'm already in the YM. I don't have any TF calls yet. So in any case, I dump the YM and I'm flat. But I reinstate the buying the NQ next push down if coming. I canceled my ES orders. So that's where I am at the moment. I'm out of the YM, but I'm willing to buy the NQ if it goes lower than this. And that's not intuition. It's just the serial sequence saying this is the possible low if it breaks one more time. It's got rules of its own, and that's all I can really tell you about it. Well, the NQ does go down at once, but I had the NQ. This is a glow low, or the Globex low at 26.03. It's an exhaustion point, and only got to 26.06. I didn't catch it there. Wish I would. If I had caught it there, it spikes up 4 points. Take partials out, put a break-even stop. Just see what happens after that. But immediately when this happens, serial sequence says anything below this low starts a new series. That's not a prediction, but it would be a position. So I put that script in, selling NQ on a breakdown on stop, or stop and reverse if you happen to have grabbed it, which means you'd be out of your second one and you'd be net short below the low. So that's where I am currently with trades. I actually missed that trade. I didn't get in the NQ. This person said someplace up here that you could take partial profits. That confused me because he didn't show any entries. If he got in up here, he certainly doesn't have profits. He's break even from anything he bought at 13.49. If you manage to get in at 13.47, if you've ever traded the ES, it needs to trade through your price to get a fill. The NQ is not that way, but the ES is so liquid it has to trade through your price. So I don't know if he actually got in or not. I thought that was cute that he said you could take partial profits, though. What happens here? I finally get an order. I finally get a trade signal out of the TF, and this comes at 9:53, which is exactly this bar, to sell TF at the current level to open the short. I usually try to give a wave in advance, like selling the next push up. I was a little late on it, but you got 60 seconds. It's a long time, and so I got a fill on this order. And keep in mind that I'm at 9:55. The news is approaching. I'm taking a position in front of the news. I'm canceling my NQ orders, and I picked up one so far at 7782. Anybody could have done as well on a fill there. It wasn't a great fill, but I put a limit order in slightly above there, and I did get filled for a second one at 7785. It's just throwing it up a bit, just trying to make it come to me. I didn't know if I was going to get filled or not. It sort of looks like this. So if you're trying to build a position, then make them come get you. You get a second one up there, it's a better fill. So that's very typical. I've got 5 minutes to go before the FOMC. This person hasn't called anything else here, no short entries or whatever. We get a slight decline. That's good for me. That gives me a point profit on my first one, and I didn't like that fill very much compared to my second one. So I bail out first plus 1. Stop goes to break even. I canceled my NQ orders to sell below the low. Well, I did that right after I got filled in the TF. And there's a reason for that, because the news is approaching. And putting an order below the current market in the NQ would make me vulnerable, if the news is bearish, to getting a fill on a stop on a heavy news item, which means I don't know where that fill is going to be if it's a stop market order. In any case, here's my strategy. News is coming down to 2 minutes. This is a auto script that appears in my room at 9:58 every day. Scheduled economic reports in 10 a.m. in 2 minutes, if any. Pre-news trades should now show a premium or a cushion or a profit from here, or risk slippage on stop out. In other words, be prepared to get out of the way. Well, I've got a premium on this one. I'm in the second one, clear up here. And my strategy will be, if that price is still down here, when the news comes out, I'm going to ride it through the news. So I have positioned to stay with it. If, however, price comes back up to my entry price in the next 2 minutes, I'm going to get out, because I don't want the news to start at the same place I got in. I'm not predicting the news. If the news is bullish, then it's really bullish. I got 4 reports coming. The next tick after the news report comes out may be up here. In which case, I'm going to have tremendous slippage. Now, I did pay for the trade by getting out one, but I don't really want that. I don't want to take that much of a risk. So I've got a bit of a cushion between where I got in and where the news might come out. But I've got 2 minutes to find out. This person hasn't taken any other trades. I don't know, maybe he took partial profits from trades he didn't commit to. Well, the news came out. If you remember when this came out, if you were trading, and this is a big spike down, and this went from here to here. If I had a stop order to sell it short here, my fill would be there. And maybe not quite that bad in the ES, but the NQ, it probably would have done the same. So going with the news or bracketing the news is usually a bad way. Now, the news isn't always this dramatic. Sometimes it just comes out and it meanders through it, and if you had a sell signal to go there, you can go with it. But the news can be very whippy, and your fills are often bad at the moment the news is in. So I don't trade that way, but I do position in front of the news. Or, if the signal comes, I position after the news. I'm going to show you that next. So basically, I've got 3 points profit on this one, a little bit over maybe, and I got a point out already, and I took a point net about equal to a point in the YM on the way up. So I'm at 5 points. And that's actually about what my goal is, and I'm here at the first 30 minutes of the day. I tend to get a little careful after I hit a goal because I'm only trading the first hour and a half. In any case, I got out here. But there's something I wanted to stress was that serial Sequent said, go with this low. Stay with it. Well, maybe I should have done that here, but news often zigzags, can come right back and close a gap and then go down. It might be vulnerable that I'd give up the whole thing. So it's the bird in the hand rule here. It's just money management. I only had 2 positions. You know, the third, you could do it as a runner. This is what it looked like down here. By the way, this person in the other room had the audacity to say, if you're shorted, you can take some profits here. Now, that got me laughing. All right? That really made me laugh. Here's the NQ. So it looks good. Serial Sequent was right. It said below this low, it's going to go to another series, so get short. But my fill for this, if I had used a stop order, I use stop orders. If you use stop limits, you almost never get filled. So it's something I usually don't use. I use which is basically a stop market order. I take my chances on it, but not when the news is coming out. My fill would have been down here. In this case, I might have gotten away with it. But normally that's not the way you want to approach. Okay, one more on the news, and then we're going to change the subject a little bit. This, if you remember what I just did, I had a signal to go with the news. That is, serial Sequent said below this low is an inflection point. That means go with the trend below this low. But serial Sequent also tends to identify the lows that should be bought. The news lows when they're bought. And that's what I was getting here. This is the day before. And this, by the way, this is 3-minute bars. I'll show you where I use tick bars in a little while. Mostly in the early going, I use tick bars, and I switch later in the day because you can't get tick bars all on your screen. These happen to be 3-minute bars. I like 3-minute bars. Don't worry about that. You can use anything. Serial Sequent works in any time frame. But this particular period of time, and this chaos pattern, and that's what I call this. I don't know what this would be, an Elliott wave. I have no clue. But in any case, what serial Sequent said was the next low should be a low to buy. And the news is coming out on a, let's see, this is a Thursday, I think, when at 12:30, when Bernanke was either going to decide to extend his so-called twist or to go to more aggressive third quarterly financing. So everybody was kind of, usually the Fed comes out at 2:15 on rate cuts, but this is one of the special deals that's come in recently, and they're doing them at 12:30. Well, here's 12:30, and the next push down, if it's on bearish news, becomes a buy technically. Not because I'm going to predict the news. Maybe the news is going to be good and it's going to shoot up. But if it goes down, I have a buy. So over here, I'm telling where the support is. Could buy new LOD post-news. That means after the news. Support numbers. So I give out my support numbers. I've got 777 even, and through that one, the next is 7749 and 7748. Just call it 7745. So that's down here. There's one there, and there's one there. I have no idea what this news is. I mean, Bernanke speaks, sometimes the earthquakes. I have no idea, so I don't have one waiting there. But this low on bad news could be a buy for me, based on serial sequence. So it's not a prediction of the news. It's letting the news fulfill something that's probably going to happen anyway. Okay, so it slams down here. It goes right through 777. I'm glad I didn't have one sitting there for it. But it never goes through 775. These are 3-minute bars, so there's a lot of work down there. 3 minutes is forever when you're watching the market, as you probably know. So I go long, buying TF at current level to open long, filled 1. I'm just fading the news with a 1 lot. I got filled at 776. There's no brain surgery there. That's actually here. That's 7765. I've cut my slide off a little bit here. 776, and since that was the high up here at 778, 780 plus, I put a 4-point target on it, and I simply follow it up. It gets to plus 3.5. I move it up to 2, and then it collapses on me, and I'm out 2. I'm out plus 2. So once again, I'm trading in this case after the news. Before I was trading before the news. But here's the point I'm trying to make. I'm not predicting the news. I have no clue what the Philly Fed's going to do. In fact, even when the news comes out about the Philly Fed, are you really capable of reading and interpreting it? I mean, sometimes the numbers are worse than expected and the market goes up. And they'll debate about it on CNBC for hours. It doesn't make any difference. What I'm looking for are the technical places to buy and sell. And the news sometimes falls in between them. And sometimes the news accelerates to get to them. So I'm just letting the news happen, and I'm trading around it on technicals. If the news comes back to the place that I got in at just before it comes out, I get out. I know the news can go against me. I'm not predicting the news. So I hope you see what that strategy is. By the way, this obviously should have had a runner. These are 3-minute bars, so a bit a little enamel off your teeth waiting for it to turn around, but that's what this did. Serial Sequent said this low was the buy. Okay, let's talk about this a second. Because my approach to the market, I put that guy up against me, and I'm sure he's a nice guy. But I put that approach because what he was doing from the very get-go was injecting some trend prejudice. He said that this was not a day for any plunging. Well, you remember what the day before this particular last example looked like. It was a day for plunging. And anybody can be wrong about guessing the market. That isn't the issue. The issue is why infect your trading with trend prejudice when the approach is to trade from models at the right edge of your video screen. And most traders try to figure out the market as they go. I just call this a flowing intuitive analysis. And they often have a lot of tools. They have their Fibonacci, or they have their market profile, or they have their various oscillators and so forth. But what I notice a lot of beginner traders do is that they simply use that stuff as decision support to support an opinion that's beginning to gather about the market. They want it to go up, or they think it's going to go up, and they look for reasons to support it. That is flowing intuitive analysis, and it makes you feel like a genius when you get it right. But it's not the same thing as having a trade plan. And this is my opinion. I believe sincerely that those 90% who do lose are losing because they're trading without a plan that limits and restricts their activity. And they're using intuition. Now, it sounds like guessing, but maybe it's educated intuition, and maybe there's lots of decision support from their tools to do it, but that's still not the same thing as trading on a specific trade model at the right edge of your video screen without bloviating about the market. I'm going to try to come back to that, but I'm not going to belabor the point too much because I have another way I can teach you, and that's in the free ebook that I've written extensively on the subject. And all you need to do is write free ebook on the subject matter and send it to will@valhallafutures.com, and I'll send it back to you. I suggest that you read it. It is the culmination of what I've come to understand in some 20 years of experience. So that enough ought to be worth something, since on most days, if you check my track record, I make a profit. And I believe that it can help you. I'd also like to offer you some free coaching session, a session or two. I'd be glad to. I don't work in the afternoons. I don't trade in the afternoons. I do other things, but I'd be glad to talk to you. And this is not a hook to sell you anything. I don't have coaching sessions, and this is not a method for me to try to get you to take my course. I'm offering it to you because I had a mentor when I was beginning. He helped me avoid making a lot of mistakes and wasting a lot of time and losing a lot of money. All you need to do is just type Skype chat in an email and send it to will@valhallafutures.com and include your Skype name. Don't worry, I'd never give it out, no reason to. And just be patient with me in getting back to you on some afternoon fairly soon when I get a time. Don't be alone out there as a beginner trader. Build a community and at least let some of that community challenge the current place you reside in, mentally, educationally, emotionally, as a trader. Or stay exactly where you are. But be satisfied with your current results. You're not going to change those results unless you challenge your current comfort zone. Word up. Okay, some of my approach. Yeah, I have my own methods of getting numbers. Everybody's big on numbers. If you're a floor trader, that's almost what you live by. And I have my own methods as well, and I've used those ones that everybody else has used, so I've been through them. It is not Fibonacci. I can't make Fibonacci work. I know everybody loves Fibonacci. It's like sacred science, but I just can't make it work. It's not market profile. I've studied market profile, and if you don't know what it is, you can go to the web and figure it out. And it's not based on floor traders pivots. Now, I happen to like floor traders pivots. I include them, the slight variation in the formula, and that's very old school, but I think those can be valuable numbers. But it's not based on that. It's a unique method. I've never seen it anywhere before. I learned it by studying the markets, and it is often accurate to the tick. And I'm amazed by it every day. But I'm also big on exhaustion levels. And exhaustion levels tend to be ignored by people because people with numbers think, well, they have a can't break number. That is, if it does break, then it means something significant, and it means the whole trend's going to collapse and so forth. Exhaustion levels usually break those numbers. The stops are usually hiding at those numbers. So I often expect those numbers to break. And exhaustion levels are very key to what I do every day. This is just from my screen. The software puts this out so I don't have to try to figure it out. And this is pretty sparse. There's only 2 numbers at this particular time. I just happen to compare this to Fibonacci, which everybody loves, and maybe there's some validity. I mean, there's a bounce off the 50% retracement. It didn't quite make the 62. I just never know what number to buy. It's not enough for me. And Fibonacci doesn't, always tell you exactly where to do it from. You can do it from yesterday's low or the weekly low. You can do projections, extensions, bound from the high, and so forth. And pretty soon your screen is covered with numbers. It just doesn't help me. If you're making it work for you, I'm not suggesting you change. I know some great traders out there, much better traders than I, Robert Miner included, and this stuff is religion for them. I just can't make it work for me. But exhaustion numbers are big to me, and I'm picking on this guy again when this chart ever comes up. Here we go. Because he was trading the ES on a particular day. Oops, it's not the one I wanted. Did I go the wrong way? Let's go back to this one. And he had this is important, exhaustion number example here. Here we go. He had one of those can't break numbers just down here at 1304-ish. And then we were approaching that. And that means if it breaks, then it's significant, I guess, for the trend or something. I think it was just queuing off these lows. And it can't break that or something. I don't know. We've determined that we're in a downtrend. It wasn't stop and reverse for him, but it was one of those must-hold numbers. All right, I think that was the acronym he used, must-hold. Well, I was trading the YM at the time, and I kind of had a must-hold number too, but I was looking for it to break. Same sort of chart, same sort of thing right here. This is where it ended, and this is what happened right here. And so the next push down, this is language I use. It's a 5th sequent in the YM coming soon. It doesn't mean anything to you. It has nothing to do with waves. Serial sequent is based on chaos patterns. But this is a buy for me. And so I put buy stops in as it broke the low and just trailed them down a bit and let that low keep going. And it reversed, and I filled too. It's real simple. At 12,383, right down there. It's a great fill. It went down, and I followed it. Bink, turned around, I got filled. I didn't know how far it was going to go. These things, it's unpredictable. But it was breaking that low over there, and this number broke that must-hold number. I don't know what this guy did with when his must-hold number broke, but I'd like to ask you one question if you've ever had this happen to you before. The feeling that when you had a stop below something, that they knew where it was and they came and got you. Listen, floor brokers know where all the stops are, but not because they can see a book, because they just know where the charts are. This is where everybody hides them. And as a floor broker, if you walked up a floor broker and said, you're not supposed to take, what do you think about taking it? Maureen, can I come back to you on that? Thanks. You're not supposed to take you're not supposed to buy at new lows. It's sort of a rule not to buy at new lows. If you approached a floor broker with that, they would laugh at you. That's where they make their money, is at new lows. Well, this thing turned around like crazy, and I just followed it up. Out first +10, moved, stop goes to +10 when I got to 20 and so forth, and I made 71 points on that. Because it did break. Not just because it broke a number, but it broke a number when it fulfilled what serial sequence said would be a full sequential trend. I don't know what that other guy did. It broke his, can't break number. I don't know if he got short up here thinking it was going to go lower. I have no idea. No commitment to trades. But coming up, I'm using it again. I'm really picking on the guy, and I apologize to do that. But he was just raw meat on this particular day. He had a can't break number up here. This is a breakout number. It wasn't the high. It was like 13.1350 or 13.13 even or something. Must hold, can't break, or if it's indicative of breakout, if it does. Well, I just want to examine that because at 1300 it did break out. And it went to a new high. And it was the best place to sell it short. And that was 5 points. And you can work all morning in the ES trying to get 5 points. So I just wanted to demonstrate here this thing about can't break. I look for numbers that do break. I want them to break, because breaking is usually a sign of exhaustion. That's where all the stops were hiding. Anybody was short on a day trade basis? Of course. They didn't know it. They didn't have a secret book. They can't see where your orders are. This is where all the stops are hiding. And guess what they did? They faded them as they were being hit. And you can do that too. This rule that says you can't buy new lows, just take a look at this chart for a minute. If you had bought every new low here instead of going with it, and if you had sold short there, that'd be a disaster. But just imagine as a daydream, you bought that, and you bought that, and you bought that, and you bought that, and you actually look pretty good. I'm not suggesting you go out and buy every new low. Serial sequence says some lows are going to keep going because there's supposed to be a whole nother series of lows when certain lows break. And if you don't know those rules, you are stepping into a bit of a risk. But I want to shift your thinking a bit here about being afraid to buy new lows. Some people will only buy the zigzags. They're going to buy on breakouts. But if it's not ready to turn yet, buying on a stop right here was actually the best place to sell it short before the trend was really finished. I'd rather buy it here. That's less risky to me, but that's kind of scary. That makes you uncomfortable to make that trade. Selling short up here, how many of you currently would be able to do that? I don't know if I didn't trade that particular one, but I did buy this low, and I sell new highs all the time. Because I'm a floor trader, I think like that. Any case, exhaustion numbers. I wanted to give you that as an example. I'm going to give you a deliverable. I'm going to give you a piece of my support and resistance grid. It's called the ORB. What is the ORB? Well, I made that up. It's opening range bar. Well, there's no such thing as the opening range bar, anybody who knows that, but there is something called the opening range. Now, the opening range is the first 30 to 45 seconds of the day at 9:30 Eastern Standard Time, when all the orders that have been built up that need a large volume opening are exchanged on the floor in the pit. And the pit boss will call that number out once all those orders have been processed. It takes less than a minute, and every good floor broker writes that number down, writes that little tiny range down on his notebook. That's how critical the opening range is for anybody who trades on the floor, and anybody who who's had experience will be able to tell you that. Well, we're in the electronic world. We don't have a pit boss. So I just bracket. I go to 1 minute bars for a minute, and I bracket the 1 minute bar with its high and its low, and I leave that throughout the whole day. And that's the opening range bar, and that's the centerpiece of my support and resistance grid. And it tells me a tremendous amount of information about the rest of the day, of how prices are shaping up according to the opening. For a futures trader, the opening is everything. For stock traders, they tend to look at yesterday's close. So as long as prices are above it, prices are still green for a stock trader. Prices are still green for a stock trader right here because it's still above yesterday's close, but not a futures trader. Prices are red here. We care about what's relationship to the open. Stock traders often care about the relationship to the close. Next, deliverable. I'm going to give you a model I look for every day at the ORB. Doesn't occur every day, but it works far more often than it fails, and it does fail once in a while. Caveat emptor. It's called the 3-bar at the ORB, and it looks like this. The rules are very specific. Just listen and absorb them. I go to the 1 minute bars when trading this, even if I go back to tick bars afterwards, but right here I want to look at 1 minute bars. And there's the opening bar, 1 minute bar, and there's 3 bars going up, and they are something very specific about them. Each one made a higher high and a higher low than the preceding one. That is the critical phenomena, and it can only be these 3 bars. On the 4th bar, if I go even 1 tick higher, I'm going to cancel the order that I'm going to place as soon as these 3 bars appear, and that order is to sell 1 tick below the middle bar of the 3 bars on a stop if prices break it. If I get a 4th bar that goes 1 tick higher, I cancel it. If any of these bars are not making higher highs, like one of them is just matching or shorter, it's not the same trade. It's very specific. It can be this and only this. I don't care about the colors. This bar could be white. The next one could go down. It could turn around and go up. I still got 3 bars with higher highs, so I don't care about the colors. My trigger is below the low of the middle bar. So I get filled here, and I usually use 2, and I'm out of one almost immediately. I trade the TF with this. I never trade this with the ES, by the way. It's not volatile enough. Forget it. But it works in the YM really well as well. And I'm out with 4 ticks immediately. Why is that? Well, that's because my stop then is automatically moved 4 ticks on the other side of this in case it comes back in my face. I just want it if it's clean. And if it's not, I want out early to pay for the trade. So I pay for the trade real quickly on breakouts. I don't trust them very much. They can be treacherous. And follow your stop down. This is a great opening trade. You practically hit your quota before it's even started. Be sure you use it. Following stop. Don't make assumptions because the market could come right back. On this particular day, it did. I'll give you some more examples. Here it is going the opposite way. Red, red, white. I don't care about the colors. 3 bars down. By the way, the other property, of course, it's obvious, but that they were overlapping. Sometimes, rarely, the market will go down, and then the next bar will open right where this one left off, not overlapping. It go down, and the next one will open up right where the last one left off and go down. Well, those bars weren't overlapping. So there is a criteria that I failed to mention, although that the stacking thing is pretty rare. Most bars do overlap a little bit. So I've got another one. As soon as this appears, I put a buy stop 1 tick above that, keeping my eye on the next bar. Up, 4th bar takes out the low of the 3rd bar. I reach up and cancel this order. Glad I did, because I would have been filled right there on a long and not very happy. Same example, but slightly different colored bars. Working the same thing again. There's my buy stop. Goes right there. Real simple. I'm filled. I'm at exit 1. Trail the stop. See how far it goes. Sometimes they just keep going. These all happened fairly recently. This one I would have been filled on. 4th bar doesn't go above. Stalls a bit. That's okay. I get filled here. At least goes 4 ticks. My stop goes to 4 ticks. I probably would have been stopped out on the second one. A little bit sloppy. It might have annoyed me that I was stopped out, but I don't really care. If it's not clean, I don't care. But I'd like to get out of one, My stop is moved automatically with the strategy. So in this case, I probably didn't make any money. That one was clean and kept going. Notice the fourth bar did not exceed the third bar even by a tick. Close, but no cigar. So I was still in there for that break. These all happened fairly recently. Same thing here. It's slightly different. Looks like just like the other one, but they're not the same. Different days. I get filled there. I get out one there, and this stop does not look like it gets me. It just comes up a couple of ticks below where I got filled, so I survived that particular one, and maybe had a runner and kept going. Don't remember. Same story here. Another day. Okay. I need to get on to serial Sequent, and I'm running out of time, so I've got to do this really fast. Serial Sequent works in any time frame. The formula targets reversals and breakouts, and it's expedited by the software labeling. It's not Elliott wave, not to be confused with Elliott wave. It goes by chaos patterns. In Elliott wave, there are only 5 waves to a trend, but the market never stops after 5 waves. So my experience with Elliott wave is that they just keep moving the label on you, and you keep getting stopped out. But serial Sequent doesn't do that. It targets the best places to play breakouts when you want to go to the trend, and it targets those highs and lows which you should fade, that are the end of the trend, and provide profitable swing back in the opposite direction. Let me give you an example. This just happened just the other day. It was a real test, I thought, of serial Sequent. I was going to compare it to Elliott wave, but Elliott wave keeps breaking down, and then they keep having subwaves. That's how they fit everything into 5, and it becomes endless. At the end, it always works out perfect, but in the meantime, it stopped you out. This is just the other day, and there's side-by-side time-wise with the NQ and the TF. Serial Sequent was saying something that surprised me. My intuition wouldn't go this way, but it said sell below the low of the NQ, next push down, go with it. That's an inflection point, and it should proceed to another series of lows. Well, I didn't like that. This looked better to me. This is a triangle in the TF, nice line here. Put a sell stop below that. Sell that short. But Serial Sequent said next push down was a buy. The opposite, even though these are occurring at exactly the same time. Well, it was right. This breaks down and falls another 10 points. 10 points isn't a bad trade in the NQ. The low in the TF held for the entire day. Now, I got 60 more seconds, so I'm going to give you one more. This was just yesterday. These are, by the way, these are tick bars, 150 ticks. I like tick bars sometimes. You can use serial Sequent in any methodology, and it breaks down, eventually move out of the tick bars because it uses up your whole screen. But it really exposes the trend and what's going on, and I had a buy here. By the way, I dumped it when I got to the ORB. I just took a one lot, got 1.6. I had a buy here with a MIT order at +1. I got 0.9 out of it. But it also said to sell short this low. And so that was one. I haven't caught up with the text here, but I want to review this real quick because I want to get down here. This emphasizes what I was trying to teach you about trading on a trade plan rather than trading on intuition. So let me try to get to this real quick. I'm just reviewing what my trades were. And so I sold this short, and I did profit by getting out one. And the news is coming up in 10 o'clock. And there's not a huge news, but it was like business inventories or something, whatever was there yesterday. It wasn't Bernanke thing today. And so it came back to my entry right at 10, which means I dumped it. 10 seconds before I dumped it. I think it says, have I caught up to that? 10 seconds, out one. Nope, that's up here higher. That's okay. Don't worry about that. I just want to give you an example of what my strategy was. But it did say, serial Sequent said, next push down. So if this news turns out to be buy the bad news. And I did buy that. And I put a stop to +1. I'm finally catching up with myself because I'm trying to get down here. I just wanted to explain all this. Because these are trades I took all the way down. I'm way ahead just on buying lows down here. And I did short once and go with it. But I just didn't happen to make any money in it because I got out my second one to break even at the news. Okay, so I bought this. Stop goes to +1. And I'm out +1. So the next trade call is to buy TF on the next push down. Serial Sequent said to buy TF on the next push down. Even though I'm bought here, it also said to buy here. Or the NQ. Well, I wanted to show this to you because I was being infected with a strong trend prejudice at this point because the internals were so bad in the marketplace. I didn't really want to be a buyer. But I don't do it intuition, so I said or NQ. So I bought an NQ. I got filled there with a really tight stop. Mine is 1.25. I knew I was going to get stopped out. This thing's going to go much lower. So I bought the NQ instead of the TF. And I put this in after this forms at this minute, selling TF on a breakdown to go short. So if it goes lower than this low, I'm going to be short the TF, and my mouth is watering, because I'm sure I'm going to get stopped out of the NQ, and I don't care. I'm sorry, but I have to come back to your question. I just got down to the last couple minutes here. So my signals here, I'm kind of talking to myself. So signals are long here with a stop and reverse. Well, I don't really want to buy here, but I go ahead and do it. I'm talking to myself. You know, I got students watching. They know what this trade is. So I'm buying TF at the current level to open a long. So I buy one here. I've already placed an order to sell short if it breaks this low. I'm selling TF on a breakdown on a stop. I'm sure I'm going to get stopped out, or this long here, and in fact I'm so sure. Remember, I'm long NQ up here. I put the same thing in for NQ. I'm selling NQ on further breakdown to be short if it goes below the low. I wanted to give you this as an example because I was infected with trend prejudice at this point. I knew these longs were going to fail, and I was going to be short. And this is what the market did. It never broke those lows. I never got short, the NQ or the TF. And the TF bounced up. I only had one contract. I had no faith at all. But what am I trying to say here? I used a trade plan. I didn't really have much faith in it, but I did go ahead and buy this, even though I was expecting to get stopped out. Even when I got up here, I didn't have any faith, and I dumped it. Now, yesterday I was up about 5 points, so I'm not complaining, but I left most of it on the table because I never had the faith in it. So serial Sequent tends to identify those places where the market should finish a series of lows, and also identify those places where if it breaks, it should go to a whole new series. But I'm not trading on my opinions. I'm trading on a plan. And the right plan was to be long here with a stop and reverse. That's a very subtle difference. This thing, you could say it went against me. It certainly went against my opinion of what the market was going to do. So we don't predict, we position. And it's a critical difference. My trend prejudice was bearish, but I made a profit because I traded from the right edge of my video screen with a model. I'm trying to emphasize that. Read my ebook, and it'll explain it a little bit more. I've now gone over my limit, and they're probably going to kick me out, but I can, if you send me your Skype, I'll get back to you with personal questions. Is anybody listening? Is Kathy still here, or Kevin still here? Emailing, recording. I don't know anything about that, but the recording might. You can email me questions. I don't think they record it. I really don't know, but you can email me questions, and you can email me your Skype name. I prefer you not send me your telephone number, but you can email me your Skype. If you don't have Skype yet, you're really missing out. It's amazing. And we can chat on the phone, and I can tell you a little bit more about it, or just answer questions. I can be a contact for you if you're just trying to get started. You're not ready for what I have to offer. That's fine. But I'd be glad to be a human being at the other end because I know what it means to get started. Will@valhallafutures.com. Put ebook in if you want the ebook. Put Skype chat or coaching in if you want me to call you back and give me your Skype name. Last thing is, wait a minute, I've got one more deliverable, sorry. And if you want to watch me trade, this is what last deliverable, members only chat room, free attendance. Send me your real name. I've been honest with you. Send me your real name and any chosen nick you want to use in my room to will@valhallafutures.com, and I'll tell you how to get into my chat room, and then you can use the criteria I've suggested you use on all vendors on me. See if I put in trades that I have to monitor, with the messiness of trading, with stops and targets and so forth. See if what I have to say is backed up by a track record that you can watch in real time being made. Not just decision support saying, well, you guys could take some profit here, if you got in down there. But of course I didn't because I'm just a professional. My approach is obviously different. Use the criteria on me, use it on anybody. You may not be able to take trades where I do. I purposely take them in places where most people are uncomfortable because I sort of reverse engineered this when I was trying to figure out how to be successful. I did not want to trade where the 90% trade. They trade where it's comfortable, and I've learned to overcome my discomfort by trading with models at the right edge of my video screen, whether I like the trade or not. Obviously didn't think the last one was going to work. Okay, I've overdone my stay. I want to thank you guys. You've been very patient, but I will answer all your questions if you just send them to me. They're important. I didn't mean to override them, but I knew I was pressed on this hour and I wanted to get through those things. Maureen and some of you other people were asking questions. Just put them in an email, and I will answer them. Average, how many trades do you trade? When I trade the first hour and a half of the day, I never trade more than 10. I have a trade plan that doesn't allow me to take more than 10 trades, but I usually don't get that many signals in the first hour and a half anyway, John. If you came late, I only trade the first hour and a half a day. I'll trade when I show up. Sometimes there are only 3 or 4 trades. Look, if you want to see how many trades I take, go to my archive on my website under Performance, or go to the daily blog where I post my trades every day. Count them. You are welcome. Wyoming Cowboy, where am I located? Well, right now I'm in Kansas City, but I've been located in the East Coast most of my life. Didn't mean not to ask these, but these don't seem real. Is it serial Sequent? That's the name of my method? Yes, serial Sequent. You can read about it in more detail on my... Need to wrap up in 4 minutes. Sorry. Sorry, Kevin. Okay, I'm going to turn my will not. Will not? Maureen, sounds keeps cutting out. Oh, I'm very sorry about that. Was that true for everybody else? Kathy? Kevin? I'm going to turn my mic off. Thank you so much, everybody. I'd be glad to talk to you in person over Skype. Had the pleasure of having Will Congress here today from Donald. We want to thank each and every one